Hey, what's going on, everybody? Today we're going to be talking about US dollar listed as strong sell on TradingView, while BTC, ETH, and XRP flash buy signals. We also have exchange outages are going mainstream. This article covers what Robinhood can learn from crypto, but I also want to talk to you guys about setting up some things now before you have to start cashing out to make sure that you actually can cash out. I think this is something that a lot of people are sleeping on. We also have Coinbase launching a new platform allowing startups to create custom crypto assets, and institutions are buying Litecoin at a 1200% price premium, which is pretty insane to think about. And Litecoin, of all digital assets, is trading at this type of premium. With that said, if you guys are returning here and you like the videos, make sure you drop it a like. And if you're new here, well, I hope you enjoy the video. So TradingView is giving the US dollar a sell recommendation amid a historic drop in the value of the world's reserve currency. The platform's trading indicators use a mix of methods for analysis, including moving averages, oscillators, and pivots to forecast where assets may be heading. So remember, guys, this is just a TradingView signal. That's really all this is. But it's cool nonetheless, because it's the dollar going down, or at least it's the dollar having a sell signal, and it's the top three major crypto assets having a buy signal. So based on the aggregate of technical indicators used by the social trading platform, the US dollar index has a sell rating on 1 day, 1 week, and 1 month time frames. I think we all have to admit things can get pretty interesting at this point. So moving averages on a 1 day, 1 week, and 1 month time frames recommended a strong sell. Meanwhile, TradingView's technical indicators for Bitcoin, Ethereum, and XRP are all flashing buy signals. At time of writing, the three largest cryptos by market cap all have a buy rating on TradingView's 1 day, 1 week, and 1 month time frames. And we also know that Bitcoin's latest pump was also while the dollar was being decimated, and we know that during the 2017 Bitcoin bull run, the dollar was being decimated as well. The sell signal for the dollar comes as the greenback threatens to plummet near its lowest level in 27 months. And as we know, guys, the Fed is printing the absolute stuff out of the US dollar. So we are reducing the buying power of the dollar even further when confidence for the dollar is already starting to get low among people who are in the know. Exchange outages are going mainstream. Both crypto exchanges and popular online trading platforms, including Schwab, TD Ameritrade, and Robinhood, have a rising number of young investors who, working from home during the CV pandemic, spent some of their work hours trading for their own personal accounts. These platforms have another thing in common: outages in the midst of high volume. And we know Coinbase also has this problem, probably worse than these exchanges. So on Monday, login issues were reported from customers on Robinhood, along with a few other trading platforms, including giants TD Ameritrade and Schwab. The outage was allegedly caused by the stock splits of Apple and Tesla. Silicon Valley-based Robinhood was the subject of more than 400 complaints reported to U.S. regulators during the first half of 2020. A spokesperson from TD acknowledged high levels of slowness some users experienced on its web and mobile platforms, but did not offer an explanation of the cause. Robinhood and Schwab did not respond to inquiries from CoinDesk. Robinhood apparently is not alone during a time when a growing number of new and young investors are betting their money on different markets, including cryptocurrencies. So for any of you guys that weren't around back in 2017, the way most people, and by most people I mean all the people coming into crypto once the bubble really started going, mostly people are all coming in through Coinbase. That was the primary way that at least people in the US were coming in. You had some people on CoinMama. I'm not sure how big Binance was back then. Cryptopia was an exchange back then, but that's gone now. Bittrex was open to more states in the US back then. So you had a decent amount of exchanges if you really wanted to diversify your holdings through exchanges. But Coinbase is and always was notorious for going down the absolute most, and that could be linked to the fact that most people are on Coinbase, right? And now with more people getting into crypto overall, we could see other popular exchanges also start to go down like Coinbase, especially when we see things like Robinhood, TD Ameritrade, and Schwab going down. So the point of this is, I'm not saying to hold your crypto on different exchanges necessarily. I think that you should hold your crypto long term on cold storage, get it offline. But in terms of cashing out, you have your Coinbase, you have your Binance, but maybe sign up to one or two other exchanges that aren't as popular, that are less likely to go down, just in case. Just in case you need to cash out and you cannot do it on Coinbase. Because I know at points where I'm probably looking to cash out, Coinbase is probably going to be down. So I have redundancies in my exit plan to prepare and avoid that, because I think the worst thing that could happen is, you're ready to sell something and the exchange you're using is down, and you can't even sell it at the price you want. Especially with crypto, things get volatile. They could be up fast and they could be down even faster. So, if you miss your chance to sell at a certain price point you were looking to sell, it's kind of on you. Prepare for it now, because these exchanges are going to go down, and at that point your sell plan, your exit plan isn't going to matter when you can't sell in the first place. Our prices for today is Bitcoin's at 11,300, Ethereum at 437, XRP at 27.5 cents, Chainlink at $14, Polkadot 597, Bcash 262, Litecoin 58. We have 11-cent ADA, Tron is at 3.5 cents, 311 Tezos, Stellar at 9 cents. Let's see, VeChain is at 1.6 cents, IOTA at 33 cents. For the most part, guys, our major caps are pulling back, except for, Ethereum's pulling back, but Ethereum's still doing pretty good on the weekly. We're up 13.9% for the week. I think, the market today, for any of you guys who are looking for a dip, who are looking to get some, market buys in on some cheaper prices, what a great day to be having some cash on hand to go in for some market buys. Now, our fear and greed index for today is 83, so we are in extreme greed. Yesterday we were at 75, so we're bumped up from yesterday, and last week we're at 76. So over the course of the past month, we have been in green greed territory, which is cool, because as we know, we went months in oversold in fearful territory. So we're definitely in the green. We've been in the green for a while now. Coinbase launching new platform allowing startups to create custom crypto assets. If you guys are enjoying the video, make sure you do subscribe to the channel. You get a video like this daily covering Bitcoin, altcoins, and everything going on in the crypto space. You guys could also like the video for me. That helps me get this out to more people. Moving back to Coinbase, crypto exchange Coinbase is developing a platform designed to give startups a simple way to launch custom crypto assets. In a podcast, Coinbase CEO Brian Armstrong talks about the many regulatory and funding impediments facing by crypto startups. Although Coinbase has invested in at least 60 crypto startups through Coinbase Ventures, Armstrong says regulatory nuances remain unclear for startups that are trying to break into the space. Brian Armstrong says, quote, "There's a lot of really talented teams trying to build companies this way now, but a lot of the regulatory environment is still unclear for them about, is this a security? What kind of securities regulations might you trip up if you do these?" And so there's all these kind of different exemptions and stuff that people are trying to jump through hoops to try to make it work. To help startups navigate the space, Coinbase is going to back to the drawing board by building a service provisionally called Coinbase Launch. The service aims to streamline processes from the creation of smart contracts to the launching of token offerings and everything in between. I assume this is Brian Armstrong. He says it's a way for anybody who wants to do a crypto startup to come in and say, all right, I want to issue a token. Maybe I want to raise money. Maybe I just want to use it to build my community, and just handhold people through that process and help them with the custody of it. Help them create the smart contract, help them with the governance issues, vesting of these things if you need to distribute to those employees. I think that it's kind of like Stripe Atlas meets AngelList or something. I don't know what exactly the analogy would be, but that could be a huge unlock for the crypto economy as well, to get 1,000 new startups built like that. So guys, regardless if you think of Coinbase, Coinbase giving our data to governments, and Coinbase charging ridiculous fees, and Coinbase going down whenever there is volatility, you also have to give Coinbase credit and Brian Armstrong for the, if mass adoption is going to happen, things like Coinbase is what is going to help propel it. And, Coinbase is adding on ramps all the time. Coinbase is making improvements. And now with this, they're investing into other companies. The main thing is that Coinbase is investing into cryptocurrency and blockchain infrastructure, which us being blockchain token holders invested into the entire Internet of Things is a very good thing for us. It's a very good thing for digital asset investors. Now, institutions are buying Litecoin at a 1,200% price premium. Litecoin demand among institutional investors on Grayscale Investments surged last week. Litecoin briefly traded at a 1,200% premium on Grayscale's newly launched Litecoin Trust. Now, the Litecoin Fund is a part of Grayscale's crypto products meant for accredited investors to gain exposure to cryptocurrencies. I don't know if you guys have seen the TV commercials, but basically, Grayscale has a Litecoin trust, an XRP trust, a Zcash trust, a Bitcoin trust, a Bitcoin Cash trust, and you can invest into these trusts. So basically, it's a way for institutional investors to get into crypto. They can buy it through Grayscale and get exposure to crypto assets. And it's really cool because, as we know, Grayscale is getting more and more investors every single month. Their assets under management are growing and growing. So we know institutions are getting involved because Grayscale looks to be very successful so far. Since Arcane's report, the premium for Litecoin has gone down to 600%, which is still massively high compared to the asset's spot prices on crypto exchanges. Arcane research analyst Vetley Lund explained the high premiums. These trusts are based solely on single assets and should thus not outperform its underlying asset over time, he wrote. The fund's premiums emerge as public investors buy into the existing shares of the fund, with the original accredited investors being the sellers. However, the huge and wildly swinging premiums have caused some concern for Bitcoin and cryptocurrency market watchers who fear investors might be unaware of the premium they're paying. A Bitcoin exposure as an inflation hedge amidst the current financial instability seems to be a trending topic among some of the most renowned macro investors. The analyst adds this can make new investors more open to allocating some of their portfolio into Bitcoin. You think, guys, with the dollar being printed and inflation coming, when people learn that Bitcoin is deflationary without even really understanding exactly how Bitcoin works, people who are smart enough, who have just can comprehend the basics, they're going to take their wealth out of parking it in a inflationary non-asset, right, an inflationary currency, and park it into a deflationary digital asset. I don't see how anybody with a brain between their ears won't make that connection. At some point you have to realize, okay, I have to get out of dollars. I have to get out of US dollars, and what's the best way to get out of dollars and put it into something that is going to retain wealth? Well, primarily gold. And now we're in 2020 and we have things other than gold and silver, so we have digital assets. So guys, we are living in probably one of the craziest times of history ever. I say probably, but we probably are on a technological level. This is crazy. We are literally living through, I mean, sometimes you just have to sit back and look at what we're investing in. We're investing into cryptocurrency assets that exist on blockchain that you can't see, you can't touch, you can't smell, and these things are going up hundreds of percent. People are getting rich off them. There's business and industries and all these things coming out from them. I don't know where I'm going with this, so I hope you guys enjoyed the video. If you did, make sure you drop it a like, and with that said, I will see you all on the next one. Make sure you subscribe where you get a video like this daily. It's the red button. You subscribe, it's free, and you get notified. Turn on the notifications to get notified. All right, see you guys on the next one.